Welcome and thank you everyone for tuning into our latest Economic Outlook report with a focus on the economic indicators most impacted by COVID-19. This conversation is taking place on Friday, April 10th, 2020. Joining us on today's call is a special guest, Chris Dieringer from Microsoft Leadership, focusing on CPG and retail industry segments. Chris's experience includes marketing, supply chain, finance, operations, strategic planning, all to utilize business intelligence technology, data warehouse, application development, ERP, CRM installations, and much more. Per usual, please welcome Prevedere's Chief Economist, Andrew Duguay, who will provide an overview on potential recovery scenarios and next steps to planning. Chris, let's start with you. Perhaps you can provide us an overview of Microsoft's perspectives and insights regarding the rapidly developing economic challenges resulting from the health crisis.
Yeah, happy to do so, and thanks for having me. It's certainly hard to put into words the impact that COVID-19 has had into our environment. And again, for those out there, I want to thank the first responders, those on the front lines, those essential businesses that are out there today, keeping the wheels moving, the economy motioning, and us fed and safe. So first, I wanted to make sure I called that. Inside of Microsoft today, we are seeing three categories that I'm calling out here, and the first category, the first part, is navigating the now, and in that we're seeing organizations set up nerve centers, standing up crisis responses. We're protecting employees, so updating travel. You probably have seen stay at home, bonus and sick leave, stressing customer safety, and then reorienting around businesses, definitely amplifying on the digital and looking at cost savings opportunities. When we start to come out of this navigating the now, there will be a plan to come back, and we'll start to look at building recovery strategies. That's going to be a mix of financial resilience, operational ramp, and strategic go on offense moves, rethinking the business portfolio, identifying opportunities where we can gain share, and then keeping a tight handle on cash, as the economic impact we're seeing could definitely be longstanding. And then finally, shaping the new normal. So access shifts in consumer sentiment and behaviors that may stick post the crisis. Putting digital at the center of a lot of our relationships is a key focus that we're looking at. Ideate on how we'll evolve on product, services, what does that new piece look like, and then prepare to plan for the long term. So in those three areas are ways that we're seeing our overall environment. And of that, there are four key areas that Microsoft has looked at from a retail and consumer goods that we're gonna focus. And those four here, you can see the first one is essential retailers, right? So if you think about the essentials out there today, grocery, pharmacy, consumer goods, there is a tremendous uptick in the business and how we're looking at working within those navigating the now that are essential. Curbside pickup is incredibly a place that's going to pick up and get much broader and larger attention across grocers and across QSR, quick service restaurants, and casual dining. Looking at ship at home services, so those services that blend and work with the partnerships. You think about the Instacarts, the Ships, the Grubhub, the Uber Eats. Those are currently in today, but where consumer goods and retailers are looking to own and build that brand directly with their consumers, there's tight focus there. And then we talk about a lot of social distancing apps. How can organizations set up appointments? How can they get the right amount of motions when we look at those essential retailers today and how we protect people in navigating the now? Evolving employee needs is definitely a large area that we're focused on. I think there's been something like our Microsoft retail stores has shifted to completely online, and we've had 57,000 minutes. So, sorry, 57,000 meetings recorded to date. And on Teams today for the frontline workers and stay-at-home workers and information workers, there's something like 900 million minutes a day that we're recording, that we're pulling in on a daily basis. So supporting people and what that looks like is very important. We're seeing a connection of essential to non-essential. So the employees who have been impacted with idle workforce are having the opportunity to work with some of those that have capacity challenges. So we're looking at how we can connect both of those organizations. So furloughed employees like the Gap, for example, can start to connect up to those also grocers in their environment like a Safeway, Albertsons, to share and ensure those frontline workers are protected and that have the things that they're looking for. There's definitely increased if we look at e-commerce demand. So with the ship to home, with the online purchases, that is an incredibly important and strong area that we're seeing shift right now. One on the the consumer goods company side for supply, so subscription services and setting up those ongoing services of ship to home is a key focus. And then on commerce, building up that online practice and actually focusing on the areas that will protect and increase cost. It's somewhat of a new world for many traditional brick and mortar shops where a lion's share of their revenue and profits have been generated on brick and mortar. So moving to e-commerce and rapidly accelerating to e-commerce is a motion that we're seeing. Finally, if you look at supply chain, product visibility, intelligent controllers, and provenance are very important to prove and see the product and channel and operations are being delivered as needed. Logistics, warehouses, and distribution are important areas to make sure, one, they're protected, two, that the increased product demand is something that meets not just the convenience requirements, but also safety. And finally, I think when we look at the last piece of that, it's forecasting. So we've seen stockouts in stores. We've seen the spikes of various different products that are being ordering today. There's definitely an adjustment, and a lot of the forecasting models that we had are completely out the window. So how do we adjust the models, not just on these spikes, but during this short period of time, the near term, and then the long term, what larger key indicating factors are we looking at, and when will we come out and move from planning the comeback to shaping the new normal? And I think, as we transition, Andrew, there are some great key leading indicators that you and Prevedere have identified that call out some of these for organizations to look at as we see that long-term approach. Yeah.
Yeah, absolutely, Chris. I think as we think about forecasting and predictive modeling and thinking about how we did things before the crisis, I think what it comes down to is that I think everybody is really learning very quickly, and some the hard way, is that if you're not accounting for externalities or external factors in your predictive models, you're leaving your supply chains and your forecasts to very vulnerable spots. And so that's really what Prevedere is built off of, is combining a lot of external factors into predictive models to help mitigate external economic risks. Of course, and then we also have the health risks such as this crisis. And so I think you said it well, right? Every forecast and every model has essentially been thrown out the window before the crisis, but that doesn't mean that the process of forecasting and planning is going to be set aside for very long. Eventually, after we get through this kind of near-term stage of managing the crisis, we're going to have to get back to thinking about what comes next, what's going to happen in the second half of the year, what's going to happen in 2021, how are key categories going to change, how are consumer preferences going to maybe be permanently altered, or perhaps some are going to return to some pre-crisis normals. There's a lot of uncertainty, and if we're not modeling or trying to identify the right key leading indicators, then we could be leaving our models and our assumptions very exposed to a wrong set of assumptions about what life looks like post-COVID. And that's where we've been really tailoring our conversations in these weekly webinars lately, is about the ongoing, not only health crisis, but the ongoing economic crisis, and saying, what does life look like after this settles down? Of course, the first thing that has to happen is we need the health crisis to settle down, and we're still very much in the middle of a very challenging health crisis environment as we speak right now, when we look at the elevated levels of total new cases. Now, of course, this epidemic started in Asia, shifted its way over to Europe, and then here in the United States, and now we're talking about a lot of concerns about emerging markets starting to go through the effects of shelter in place and how that's going to have an impact on vulnerable and fragile economies there, but might be necessary in order to stem a health crisis from expanding. So we're continuing to monitor. I say the key leading indicators, obviously, for economic recovery still center around the health crisis, and can we get the number of new cases contained and sort of flatten the curve, as we say. And I think there is reason to be optimistic when we do look at the metrics, when we look at Asia and Europe as leading indicators, to say that we can flatten the curve, and even different models that you see recently. I've been looking at the one called an IHME model from the University of Washington that is often cited and talks about projections of new cases and whether hospitals and resources are going to be constrained. And lately, that models has been suggesting, fewer beds have been needed, and that fewer deaths are estimated in the United States. So I think there are positive signs that we are flattening the curve in our actions in the near term. And so hopefully what this means is that as we gather, days or weeks from now, we can start thinking about what is life going to look like after this, after some of these restrictions get lifted and the economy has the opportunity to move back to recovery. When looking at those various scenarios, I think there's a lot of different opinions out there, and even economists have been going through the alphabet in terms of hypothesizing about the various scenarios that consumer packaged goods and retailers are going to face. Everything from the potential of seeing a V-shaped recovery where the economy quickly bounces back to pre-recession levels, to a U-shaped recovery, which means that it essentially takes longer. But then I've even heard new ones. We've talked about a W-shaped recovery that is cyclical, and this could be tied to the virus perhaps coming back after we lift out restrictions. I've also heard L-shaped recovery or even sideways J. So there's all sorts of options out there to say this is what could happen. I think that a lot of those hypotheticals don't really do us in the business world a lot of good in practice if we have to model and scenario out everything. So we're trying our hardest to say what is realistic, what is a baseline scenario when it comes to thinking about planning for the second half of the year. What is realistic to come to some conclusions on. And so at Prevedere, we've been putting together a baseline scenario when we realize there's a wide range of options. But when we talk about the different impacts to either consumer behavior or businesses, here's just some highlights of where we think is a likely baseline scenario that we could start to, again, start building plans around in the second half of 2020. So we think that
Yeah, so Andrew, I think you pointed out a couple good things, that there's an infinite number of ways to probably look at what this would look like in a year or 2 years from now, and a lot of the important indicators that you mentioned as we look through it. Is there a way to narrow some of the what-if scenarios for some of our customers? So, from Prevedere's perspective, do we look at one trend? Is there a way to look at, a conservative, moderate, and potentially harsh view to try to plan on what some of those forecasting models look like? Because as you mentioned, there's various hypotheticals out there around when this could come back. What would the spike be? What does another potential pandemic look like? What's kind of Prevedere's perspective and your perspective on that? Is it to harden more on one? Is it get to a few that you could choose from? Clearly, infinites are not the right way. Definitely interested in your perspective on that.
Yeah, and we've heard everything from this is the beginning of the next Great Depression to everything will be fine as soon as we reach the peak number of cases and that starts to come down. And in reality, we know it's probably going to be somewhere in between. What we've been doing with our customers is recommending going with 3 scenarios, and we call this baseline scenario, which is what I have up here, and optimistic and pessimistic. And we might put probabilities around these. We could maybe say a 20, 60, 20, right, around this. And it's important to forecast with a range, particularly in elevated times where there's just elevated uncertainty and you need to have a wider range of expectations. But again, with the infinite possibilities, having 3 scenarios with a baseline is a good recommended standard practice.
Got it. Thank you.
Yeah, and in our baseline, I think when we look at the realities of the situation is that we will see some recovery in the second half of the year. Businesses will rebound, obviously, as stores open again and people go out to go shopping. However, it's probably not. The likelihood is that it's not going to be what I'll call a V-shaped recovery. That we don't go through a crisis like this, I think, psychologically or financially, and come out of it on the other end just the same, right? We've had a 10-year run between recessions, and during that 10 years, as is natural during times of economic expansion, you have businesses and consumers start to leverage more, borrow more, increase their debt levels, and certainly the government having stimulus packages and the Federal Reserve having backstops for businesses certainly helps cushion the blow from in a period like this. But one thing we can guarantee is that we won't come out of this crisis with any sort of lower debt levels, right? If anything, we'll be lucky if we're in as good a financial shape as we did coming into this crisis. And so this leaves us in, I think, a vulnerable spot when we think about the second half of the year. Is it really a realistic expectation that consumers will be just as confident and happy as they were before the crisis happened? They were actually at historically pretty high levels versus historic averages. I think you might see a more conservative consumer in many regards, and that could impact discretionary spending. At the same time, when you look at what businesses are going through, are they really going to be experiencing the same levels of hiring and investment as we saw before the crisis? We entered this crisis with a historically stellar job market in terms of near record low levels of unemployment, more jobs available than unemployed people to fill those jobs, and that is likely to go away. When you look at surveys from the National Association of Business Economists, even though the average economist is surveying a rebound and in actual GDP growth in the third quarter of 2020, the average forecast is for unemployment to be around 10% by the end of the year and 6% by the end of 2021. So what we're really saying is that the labor market is not going to look the same, that many of the jobs that were lost during this crisis are not coming back, and that consumers are going to be facing a more challenging job market, and that could impact consumer spending in multiple ways, we think.
Yeah, and Andrew, I like a few things that you pointed out. I think, we can relate some of the things we're seeing on the, with the 500 retail and consumer goods customers that I support in our enterprise commercial group inside of Microsoft. Initially, we had a lot of requests around cloud economics, right? Moving on-premise solutions into the cloud, hardening VPN and networking environments, building, and you might have seen we built the chat bots with the CDC, and we've got other examples of consumer goods companies and retailers who the evolving and changing policies in state and local government, including the federal government, including their own are changing rapidly. So the initial response to follow up with what you've seen is we've seen this navigating the now around where they can leverage cost savings opportunities, where they can help enable their workforce and drive. But to your point then on the comeback, and as we see companies shifting and looking out, I definitely think that, as you mentioned, consumer sentiment, consumer behaviors are definitely going to change. In the grocery industry today, I think only 2 to 3% of their entire sales of the market makes up their online sales and purchases. So we are going to see an increase in that, an increase in curbside and in online and e-commerce ordering that will drive a different behavior in logistics and shipments and sales and in how their own employees react. Also, we think we'll see a more connected workforce at the employee angle, in even areas like grocers and QOs, where as these constant updating things come through, the number one thing we hear from our customers are mobilizing a workforce is one of the most challenging but important things that strategic imperatives that they focus on, and this environment, this pandemic, will harden what some of those new normals look like. So yes, definitely agree that they're both those, from a consumer lens, from a business lens, as well as their frontline workforce on how they'll react.
Yeah, Chris, I think you bring up some great points, because you usually when you get on and you talk about recession, right, it's usually just taken as a completely negative thing. But with so much disruption going on in consumer habits, to think about how much everybody has had to change their habits on a daily basis to manage through this event. This could definitely reshape and open up new market opportunities for businesses in ways that they might have been struggling as a laggard to get involved in, or might have played a smaller role because there's some market leader out there that had control. Just thinking about all the different ways we've all shaped and changed our behavior during this, and will continue to make different spending habits and shopping habits after this crisis, the health crisis gets removed and we can go back to work. I imagine it's going to create a lot of opportunities for businesses as well.
Yeah, I think you hit on it. What's always been interesting on our side is the recognizing and understanding. We call it, the personalization effect of a consumer/customer, and that's we look at it as identity, proximity, and content. How can I identify a customer, understand their behavioral and shopping patterns, both online and brick and mortar, and then provide relevant content to them? Well, it's been very generational, right? The earlier, you'll call it Gen Y, millennials, have been more apt and easier with providing their information, granted that there is a good experience and personalized experience around that. But a more traditional or older generation, as far as Gen X, and boomers, have not wanted to be recognized or have any type of facial recognition a part of their shopping experience, until the interesting, unique common denominator is when you have a problem or an issue with a product or service, you demand that your brand that you're working with then know everything about me, right? What we're seeing is, or the interesting parts about that now, is a lot of that has shifted. People are wanting to now know, like, is the person next to me have a fever? Do they not? Is the staff that I'm going into a brick and mortar office following all the proper safety and health procedures, right? Have they walked through and done all the things to wash hands, put on protective gear, sanitize shelves and environments? And there are entire cognitive services and visual and facial recognition businesses centered around showing that, proving it, showing providence from end to end, to give that one consumer confidence on that the shoppers next to them are safe, and that the workers and the frontline workers working with them have done the appropriate needs in that spot. So there's definitely a shift in that mindset, and a wide span of opportunity to accelerate many of those things we thought might be 10 or even 12 years off, that may be 1 to 2. So yeah, it's an interesting model on what, and it's interesting to see how those models might shift moving forward.
Yeah, exactly. And so I think, to kind of tie this all together, when we think about planning for the second half of the year and we talk about scenarios, we say, yeah, plan for an optimistic and a pessimistic, because there is a lot of uncertainty. But our baseline right now is that, yes, the consumer is going to come out of this shaped very differently, and likely in a weaker financial position, as businesses who have taken a large toll in closing and distancing and all that stuff that just naturally hinders economic ability. But as we move through the second half of the year and look forward to 2021, this will shape opportunities in so many different ways. And so while we might not be in a position like we were pre-crisis, where unemployment's at record lows and wage growth is accelerating. We've still come out of this with, I think, a lot of opportunities to connect with our customers in new ways and find new ways to create opportunities, and that's what a lot of these challenging economic times tend to present, is new ways of doing business going forward. So, and we think there's still a lot of opportunity with that, even when we look at the net numbers out of the economy, and we know that this will be not a simple recovery, but it'll be bumpy along the way and a little bit of a slog. But that doesn't mean that we can't find ways to create new business and connect with our customers despite these conditions.
Yeah, I think to bring it back to some of the areas of forecast and for merchants and category buyers and demand planners and supply chain, there's been an explosion, and I think pre the pandemic of what we'll call Internet of Things devices, that sensors in stores that see on a more real-time level products moving in and out of shelf. There's blockchain solutions that show the provenance and traceability, and supply chain control towers that show from start to finish where these products move, where they don't, increasing transparency and removing risk of ethically and environmentally sourcing. I'd imagine that as the explosion of these sensors and more physical data becomes relevant, that's important indicators that would feed into the models that you're looking at across what Prevedere does today.
Yeah, there's an increased focus, I think, in both real-time data and looking at non-traditional indicators given this new environment, and those need to be incorporated into your predictive models and plans, because obviously the economy is changing rapidly and is going to look different coming out of this than it did coming in. So being able to take advantage of cloud computing, machine learning, and the millions of data sets globally out there that are ready to be scraped and correlated to your business trends to identify what are key indicators that can help you model and predict where sales are going to go is increasingly important. So we do have a lot more technology, I think, in many ways to throw at this. So while the forecasting struggle is real, when you go through a health crisis like this, that essentially itself was unpredictable, besides maybe weeks in advance, coming out of it, I think we have a lot of opportunities to discover new indicators and build better models for predicting trends in the future.
Great, excellent.
Wow, thank you both for your commentary. Chris, we sincerely appreciate getting your point of view along with Andrew, the economic impact and looking toward recovery and the new normal, using the term that you both used. It's nice to just get a glimpse at the future beyond this crisis after all these trying weeks. So thank you both. And Chris, we hope you join us again. I feel like we could have expanded this conversation another 20 minutes. So please come back anytime.
Yeah, absolutely. Had a great time. The COVID-19, these impacts and other impacts are front of mind, I think, for all of us. And again, the partnerships that I think both Prevedere and Microsoft offer are unique and provide a lens to our customers that can help them through this process. Yeah, happy to be here.
Thank you. And we obviously feel the same. So with that concludes this economic update for Friday, April 10th, 2020. Our thoughts are with all of you and your families, as well as the many scientists and healthcare providers working through this health crisis. Stay tuned for ongoing announcements, as we'll be following up with updates as developments are available. As always, if you have any questions for either Andrew or Chris, please feel free to contact me and I will forward your inquiry onto the appropriate person. Thank you very much.